All right, what's going on, guys? Today it's Wednesday. Welcome back to another trading day news segment. But before we continue, please subscribe to my YouTube channel. It will help me a lot if you actually like this video as well because I'm trying to grow my channel at the moment. But yeah, anyway, let's go some news today. So let's look at a Wall Street Journal first of all. I'm pretty sure that we all already know about the whole Microsoft deal. So Microsoft actually announced that they will be buying over Activision Blizzard, which they actually had a lot of scandals happening back in, I think, about the November-December period of time, where there's a lot of sexual misconduct and a lot of BS that actually happened. But right now, Microsoft basically snagged the deal, got a $68.7 billion all cash transaction from Activision. So basically paying about $95 per share. However, the thing is that now what a lot of people might be worried about, which is Bobby Kotick, which I'm assuming was the CEO of Activision before Microsoft actually did this deal. And I think that this CEO actually did a lot for the company, and I think that he is more like a key man in Activision, such like how Elon is the key man in Tesla. And because without this key man, people like to bring forth the whole key man risk. If this CEO is not in this company might not be as good as it is. Thing of that nature. So I believe that because right now that they are saying that over here, Bobby Kotick will remain in Activision Blizzard CEO after acquisition. Okay, this is what they did say when they actually first released the entire thing. However, now that we are going to refresh it, and then you can see that, this is an all-cash deal value at $75 billion, whatever it is, okay? Something that's very, very interesting is over here, they did say that Bobby Kotick, over here, expected to leave after the deal closes, according to people familiar with those plans. Of course, nothing is concrete as of now. Microsoft has said that in its announcement Tuesday that Mr. Kotick will continue to serve as CEO of Activision Blizzard, and that after the deal closes, the Activision Blizzard business will report to Microsoft Gaming Chief Phil Spencer, but the companies have agreed that he will depart once the deal closes, the people said. So yeah, I think that if we are talking about how key man risk is actually a thing, especially for Activision, I'm not very, very sure. I do play games, but I don't think that I'm that informed in that sphere. So yeah, we do not know what will actually happen with this deal. Yesterday, I did try to short Activision because I thought that Activision wasn't really going to be doing that well. But then afterwards, I got a little bit scared. I sold at $89, and then I bought back in at $87. I actually made a prior buying back order at $82.98. But then I was actually a little bit worried, so I basically just closed off my short position early on so that I could just cash out a little bit of money. Not a lot of money, but basically what I did there was I did not really believe in my own fundamentals, which I really should have done so, especially with the whole selling yesterday that actually happened in the market. But yeah, anyway, let's move on. Okay, yeah, Goldman Sachs. Okay, Goldman Sachs basically had one of the worst market for them in the longest time. Okay, for a bank to miss their profits by that amount was actually quite crazy. So they were down about 7% or so, and basically they are trying to say that this is due to like all the compensation that we actually have been giving to all the staff, all the bonuses and such. The quarterly profit decline of the year. To be fair, I think JP Morgan, I think Wells Fargo, I think Bank of America, all of them should probably be doing the same thing. I think especially with rate hikes coming along, that would definitely throw a wrench into the banks as well. I think banks are not going to be having the most perfect of all years, especially in 2022. If we are expecting 4 rate hikes or even 5 rate hikes now, that possible things that could be happening right now. But yeah, okay. So confident CEO who wanted to expand their empires, Russia's market pushed trading revenue skywards. Firms like Goldman have raced to hire enough people to keep up with the flood of the deals and now paying them from jumping ship. So yeah, I think something that we have to also take into notice is that I actually looked into the earnings report for Goldman Sachs, which is also on the earnings for me to take note on my post-it note as well. And basically, you can really see that the amount of money they actually throw into keeping workers. And I think that with the whole great resignation being also one of the buzzwords for the late 2021 and early 2022, I feel that, because everyone is basically thinking of where I can get a higher raise from. If I am currently getting, let's say, $200,000 a year, if I jump to another company, I can easily get a 20%, I can get a 240. And I just say that, yo, I'm from Goldman Sachs, I'm going over to JPM, give me 240 and I'm going to jump over, things of that nature. And because of that, they basically have to keep up with like bonuses, benefits, and such. So because of that, all those are definitely just costs, and that kind of adds up. And I think that that's very, very normal for us to really take a look at. But yeah, real wage inflation everywhere in the economy, as David Solomon said on the analyst, which I think this is very, very normal because a lot of people who are working basically are complaining about the fact that, if we're getting a 7% inflation, wages are basically just going up by like 1%. And that's not gonna, basically everyone's gonna be losing 6% a year. And that's kind of crazy for you to actually think about it. And it actually makes it quite dumb for you to not want to at least jump over to the next company for you to actually make a profit ASAP, that kind of thing. So, because of that, the revenue rose and such. Okay. Goldman Sachs, basically we already know all about it. Okay, stocks future waiver as bond yield rise. I think that we all know about this as well. I remember checking, I saw that the 10-year actually went up again. So over here, you can see that, the 10-year basically just went even higher again to 1.885. So our highest point for quite some time actually. Let me see if we can get a 2-year chart going on. Okay, so basically highest in 2 years. Let's see if we can do 3 years and see how we fare. Okay, fair enough. Okay, so before the pandemic was actually out, we were actually doing about 2.2 to 2.6% or so, I would say. So this decline was actually from the whole Federal Reserve balance sheet going up and stuff. But anyway, 1.884%, quite a huge increase in my opinion for this sudden shift over here, going up close to 1.9% for the 10-year Treasury yield. So this is probably why that you will see people actually getting out of stocks. I should talk about this. I'm not sure which video it is, but I talked about it before, where people basically think that, if bonds is going to be this safe, and stocks basically has been performing so badly year to date, even though it is about 19 days into the year, but it has been performing so horribly. Everything is down, but we have to also take into consideration that we're actually at an abnormal high when we actually started the year. So I think it's easy for us to actually see lower lows. And of course, with floor pricing, I'm pretty sure we all saw the market yesterday. We basically see everything just selling off and off and off. It was horrible. My trading portfolio was down about 15% yesterday. My main portfolio was down about 8% yesterday. So it was horrible. Okay, I lost easily $20,000 yesterday simply because of the bad market moves. So you win some, you lose some. Okay. And Bitcoin. Okay, let's look at the prices of Bitcoin right now, which is $41,800. Horrible. Okay, when I actually saw, I think it was on Sunday when I was at home. I was basically just looking at charts, and I saw that there was this weird line where Bitcoin basically went down below 42,000. We actually had quite strong support line at 42,000, and afterwards we actually touched the 42,000 multiple times, and then we actually dipped below it to about $41,800. That was the time where I realized, all right, Bitcoin might actually start to go back into this so-called bear market again. And I think that the whole crypto winter that I was constantly talking about, that might actually be happening for longer than we anticipated. I was actually expecting the whole crypto winter to last until maybe the second or even third week of January, which is about this timing now. That was what I anticipated. But of course, right now it's going longer than we expected. Okay. So yeah, Bitcoin stacks in 2022 underweight of stock sell-off and Fed policy. So I think that because we actually have this wrong consensus on Bitcoin per se, I feel that a lot of people like to draw comparison to Bitcoin with gold, like how Bitcoin is basically the digital store of wealth and also digital gold. I like that and all, okay? But the thing is that usually what happened with gold is that when inflation goes up, gold prices would go up, which is why it's a good store of value. But the thing is that we actually saw that in the first few years of Bitcoin, especially when it actually erupted back in 2019, all the way to 2021, in the first few months of 2021. However, the issue is that after which we started to see Bitcoin basically behaving like a tech stock, and that's the issue. Because the more that we thought that Bitcoin is behaving like a tech stock, when tech sell off, Bitcoin sells off as well, and that was the issue that we really had. Which is why this is kind of just saying under the weight of stock sell-off and Fed policy. Fed policy, basically, when we have a bad Fed policy, people tend to be risk off. And when people talk about risk off, usually it will be a tech sector and also your cryptocurrency. Because especially with how cryptocurrency is at the moment, when you can see 100 times gains or even 500 times gains, at the same time, you can also see 4-time losses, 20-time losses and such. So a lot of time we basically see like Fed policy is bad, risk off, everyone just basically, okay, I'm not touching this hot potato. Okay, I'm not going to be touching Ethereum. I'm not going to be touching Bitcoin. I'm not going to be touching Polkadot, things like that. Okay. When they are talking about the raising of interest rate, I think this is all just stuff that we already know of, such as like your Coinbase going down, Marathon going down, Riot going down. Okay, and also for this, like when Coinbase was at $320, I think, or $330, I sold a lot of my Coinbase. And it was kind of funny because the thing is, I was actually talking about it. I was saying that how Coinbase is not going to be staying up for too long. And I actually talked about the crypto winter as well. And that was the reason why I actually sold my Coinbase. I'm very, very happy with that because right now Coinbase is about $220, if I'm not mistaken. Right now Coinbase, coin. Yeah, it's about 222. Okay, so it's doing horribly. Which of course I'm not gonna be like over the moon either because the things I still like the stock. But yeah, if we do see Bitcoin and crypto in general continue to trend downwards in that manner, there is a good chance that I might buy the dip on Coinbase because I think Coinbase, I have the similar consensus for Coinbase, similar to how I treat Robinhood, because at the end of the day, I see it as a exchange, and usually the more money that actually get pumped into the market or out of the market, the exchanges are the one that wins most of the time. Such as in quarter one, I actually wrote it here somewhere. Okay, so in quarter one, the reason why Robinhood is so good for 2021 was because we had the whole GME EMC saga. We got the whole Express Cost, Bed Bath and Beyond, CTRM, whatever it is, all of them basically went to the moon. And because of that, Robinhood basically had one of the best amount of asset management because everyone was basically using Robinhood because it was free. They were doing PFOF, and it just makes sense for them to use Robinhood. In quarter two, we had Dogecoin, and because they started to allow this sort of IOU for cryptocurrency as well, and that's why Robinhood basically went to the moon. Robinhood, people started to think that Robinhood was worth $80 and such, and that's why Robinhood went all the way up and up and up. But the thing is that right now we also have to take into consideration that the asset management for Robinhood is also slowly going down and down and down. And because of the whole PFOF solution that they are using, people don't really like that as much. And yeah, I think if asset management go down in the future, especially with the hype cycle slowly cycling out of Robinhood, I think like investing, earning money in this manner is not as hyped up as before. You definitely can see a lot of people getting jaded over the whole investing, the whole trading thing, especially after GME and AMC kind of just subsided. So when the hype cycle actually get to another different cycle, I don't know what other cycle could we be doing, but when we actually get out of it, a lot of people basically just be like, you know what, I don't think I want Robinhood to be managing my assets. I might want Chase Bank to manage my assets. I might want Charles Schwab's to manage my assets. I might want Public.com to maintain my assets and such. And because of that, people basically just move to other platforms instead of Robinhood because they think that other platforms are a lot more stable and a lot safer for them to actually put a lot of their assets. And a lot of time they basically just buy and just hold it there. They don't really care, and then they just go on with their life. Okay, that's kind of how I think the hype cycle is going on. Okay, not everyone is still very, very interested in the market. For myself, I'm very, very interested in the market because I don't know why, it kind of just clicked with me. But this doesn't really happen with a lot of people, so I don't expect that to happen with a lot of people either. But yeah, because of that, I think Robinhood is definitely going to be getting destroyed by this market as well. And yeah, I mean, Robinhood touched new lows yesterday at about $14.25. So yeah, it's horrible. Okay, but anyway, let's look at... Oh, okay, this was actually quite interesting. I saw this earlier, which is Microsoft. They're wiping out $20 billion of Sony's market value. So Sony is basically PlayStation. Microsoft is Xbox. So this is kind of like the rival that we've always been talking about in the gaming sphere. And because of what Microsoft actually did, buying over Activision became such a alpha move that Sony basically dropped 13% in the Tokyo market earlier this morning. And yeah, this was basically their biggest drop since October 2008, which is the financial crisis. And yeah, I think because of this deal, Sony basically, people who are actually in Sony is like, okay, you know what? If Sony is not going to be doing this kind of acquisition, or if Sony is not going to bring their level to this, like what Microsoft is doing, there's a good chance that Sony will eventually lose their client base, things of that nature. Of course, I'm not someone who is a consumer of either Sony or Microsoft, so I don't want to go as far as to say that. But I'm not sure if Microsoft is going to be doing so well on this news either, because let's be honest, Microsoft buying this is basically Microsoft paying money to get this acquisition of this company. But it's not exactly a good thing for Microsoft either, because we still do not have any sort of good confidence behind this buy by Microsoft. Let me just check what is Microsoft price right now. Microsoft, okay, yeah, they're up 0.7%. It's barely up anyway. So I don't think we need to get too hyped up about this. Nothing crazy on this side. Okay, ByteDance cuts investment arm as deal curbs chill China tech. I think this is nothing much. I think it's just basically TikTok, the owner of TikTok, ByteDance. They basically just decided to lower their exposure to their investment side of things. I think they probably want to get into the whole strategic side of things and the business side of things, which personally I do use TikTok a lot actually during my free time. So I do like to see the consumer behavior on TikTok as well, and also how some of the things actually change in the app, such as how they're actually starting to incorporate ads, which they weren't doing before as much. But now it's starting to be a lot more obvious. You can see ads coming out every single 3 swipes and such. So I think that for the strategic and also the marketing side of things, TikTok might actually start to expand a lot bigger. So I think it might be interesting for us to look at this. But yeah, I think other than that, I think this is kind of just boring news. Nothing really much happens with this per se. Okay, I'm just gonna stop after this, which is trader bet that oil at $100 is a question of when, not if. Which yeah, I think this is completely 100% my view as well. I don't think oil is going to suddenly go down in price. I feel that oil going up to $100 is very, very possible, especially in a economy that we actually see getting better and better. So for people who do not know, that my views on Omicron is that because Omicron is basically a very, very mild pandemic level virus. Okay, so personally, I feel that Omicron is not going to destroy our entire economy. If anything, it might fix the economy, because if a lot of people are getting Omicron, we're actually increasing the rate of the spreadability, and then everyone gets it, and then almost acts as some sort of vaccine. Of course, do not quote me on that. I'm not a science major or anything. I'm not very, very sure about all this. Basically, what I'm saying is basically all from statistic alone, because Omicron do not have as much death. And also Omicron, the spreadability is way, way, way more than Delta, your Mu variant, the Alpha variant, and whatever it is. It's a lot stronger. I'm pretty sure right now the US and UK are getting about 1 million cases a day, or even more than 1 million cases a day in the past few days, actually, for Omicron cases. So because of that, if we actually see the economy going towards a more recovering phase, oil prices will definitely be going up. Similar to how when the first time Omicron actually came about, basically we don't know what Omicron is going to be, and we fear that Omicron might be as deadly as Delta. And because of that, if we have something that's as deadly as Delta and the spreadability of Omicron, we are screwed as a whole world. Okay, and because of that, I think when Omicron news first came out, especially when the African scientists actually found out about it and then told the entire world, when that happened, you can see the Brent oil prices actually go down all the way. Actually, over here there is a graph for it. So yeah, over here you can see this sudden dip down here. This dip was basically done by Omicron announcement, and then after which people started to see, okay, you know what, Omicron is not as scary as it is, and then essentially it just started to climb up all over again. And because of this, people now are just saying that, if Omicron, right now there's only two possibilities for Omicron, which is either Omicron dies out completely or Omicron just basically keep on going. Okay, and either one will not bring the oil price down. Okay, because if Omicron dies out completely, oil price would definitely just skyrocket, because it just further proves the point that we are so much in a recovered phase in the economy, and people are just basically going to be like, okay, let's start up our factory again, let's start flying out again, let's start driving to the road, let's start driving to work, everything's going to be open up all over again. Oil prices are definitely going to skyrocket. Okay, of course I'm not saying that oil prices are going to be $100, $200, $300, even 50 years in the future, because of course we are trying to get into a cleaner environment, so Brent oil prices will eventually have to come down. But the thing is that if you're talking about in the short future, like your 2 to 3 years future, you can definitely see oil prices going up to $100 or so, and it's very, very normal. Okay, and in the other scenario where Omicron actually say continues to have this sort of spreadability, I feel that same thing. People would realize that it's not that bad for Omicron to have this level of spreadability, and because if no one dies and if Omicron do not continue to mutate, the protein spikes in the virus itself, and if Omicron stays as Omicron and continues to spread with no consequences whatsoever, this will not really matter to any one of us. And because of that, then oil prices will then similarly go up as well. Of course, not at the same spike as if Omicron just suddenly disappeared. So yeah, basically, I think that's the reason why traders are just thinking, Brent oil prices going to $100, definitely not something that is unheard of. I think it's very, very possible. So yeah, similar consensus on my side as well. But yeah, I think other than that, yeah, I think there's nothing else much about this entire thing. I think right now, everyone just basically worried about the same things, which is your inflation, your supply chains, raising of rates, earnings. Oh, okay. Actually, talking about earnings, I actually do have okay. So I'm actually going to be making a video. I think it's not going to be on Wednesday or Saturday. I'm just going to throw out a random video sometime where I'm going to be talking about how earnings actually can screw you up, or you can earn a lot of money from earnings in this earnings season, in this particular earnings seasons. Okay. But anyway, I think I've dragged this long enough. It's about 24 minutes or so. By the way, thank you guys for watching, and I'll see you guys tomorrow.